Welcome everyone. This is our Thursday morning production call. Um, we got a good one lined up today. We're going to talk about the three options, right? How to explain, uh, how to go over the coverage. I think one of the most asked questions by an agent as we're preparing for an appointment is, what am I going to show them, right? Or how do I explain that? Or I think on the critical period, right, as we have older clients, is like, how are they going to find value in that? And one of the things we've learned, right, is if you don't find the value in it, right, you are not going to do a great job of explaining that to the client, right, for them to get the value out of it. So today's goal will be, what if we can show you a way that you understand the three options a little bit better, right? So that when you're presenting it, they can hear and feel the conviction of, hey, this is a great solution for you, right? Based on your age, health, and budget. So and then we'll touch on assuming the sale, some posture, and some good statements that'll get you the application at the end. Because a lot of times, right, we pitch it and we sell it really well, and they actually want it, but believe it or not, we actually don't get the sale because we canceled it, because we answered or we spoke first. And when a lot of times when we're brand new, and even now we're not paying attention, and we'll say stuff that we're already suggesting pushing it off. So push off. I want to hit on that. But first, I always like to start, right. This is an hour-long call. You're not going to remember everything that we talk about today. So make sure you do have a pen and notepad out. I have it out myself. These are all just great reminders of for the rest of the day, right, or the rest of the week, of things I'm working on to make sure my presentation, right, is proper for the client, and I'm maximizing my close rate. So take some notes. We're not asking you to change your entire way. You're already helping families. You're writing applications. The last thing we want you to do is go out and change everything completely. Right. What we ask or what we teach is write down two or three things right from your notes that, hey, I'm not doing that, and I think that'll bring some value to my appointment, right? And then just start applying those, right? That way it's easy to add something that you're not doing in your appointment that'll help you help more families, right? And put a policy in place. So, and then if any of those help you, what we ask is post it in band, right? Like, hey, we're on the production call and this is what helped me. It does help bring a lot of value to the organization, right, in the cook hierarchy. And then that way other agents can plug that in, right, and be like, hey, if it worked for Ellen, it's going to work for me. So please participate on that part, and we'll get started. We're going to start with the three options. And again, I want to keep it super interactive, so please feel free to unmute. If you can't have your camera on, go ahead and turn that puppy on. But please unmute, ask any questions, right? As long as it's topic related, that way we can keep it very impactful, and we'll get through it. So we're going to start with the three options. Does anyone know what the three options are? Feel free to unmute. What are the three options we present to clients?
I can answer if you want.
Yeah,
The full amount, half amount, and couple month.
let's go. Brand new agent Sarah. That's awesome. That is awesome. Thank you.
Yeah, thank
Thank
you.
you. Right. So for anyone that missed it, right, it's the full payoff, a partial payoff, or critical period. I do like to add on critical period. You may hear it as different names, right? Critical period. You'll even hear the policies called final expense, or you'll hear it as payment protection, right? And I'm going to give you all a high level of explanations on each of them, right? And then we're going to dig into each one of how you bring value to the client with them. So first, the full payoff. That one's super easy, right? We're gonna find a policy that pays off the entire house. If their house is 360,000, 250,000, we're going to show them a policy that'll pay it off completely. The partial payoff. This is where a lot of times we've got to make sure we're combining policies, right? Which is an accidental with maybe a term, right, or even a whole life, depending on what we're looking at and how much the amount is. But basically, a partial payoff is we start looking at half the mortgage, right, a quarter of the mortgage, or just a really good chunk, depending on their age, right, 50,000. 75,000, 100,000 of the mortgage. Again, we're just going to leave them in a really good spot. And then critical period, right? This is where we're showing them, we're showing them options where they can buy time for whoever they're leaving the house to, right? So that's why I personally like to call it payment protection, right? Where, hey, I'm going to show somebody, right, 6 months worth of mortgage payments, 9 months, a year, depending on their age and how much the mortgage. Sometimes they live, right. When I explain it to a client, I like to say, hey, we're going to look at maybe 6 months to up to 24 months, right? 2 years worth of mortgage payments for you, because it'll vary depending on their age, health, and budget. But that's the way I explain it to them. We're going to look at options like that. And then that one, 100% you want to add the accidental to be able to say this statement. So I want y'all to write this statement down, right? Because between a couple of policies, we'll be able to pay off the entire mortgage. And if not, right, we'll make sure that your beneficiary has plenty of time to not lose that house. That's my favorite statement to say, because I'm kind of adding both of them, right? It piques their interest, right? Again, we're in sales. I got to pique their interest, right? We will be able to pay off your entire mortgage, right? If it's not through that one, no matter what, there's going to be something in place that'll make sure, right, Mary has plenty of time, right, to not lose the house. So that's my favorite pitch when we're looking at critical period or payment protection, because I'm checking both boxes, and it keeps them on the hook, right, of right, like, well, I want to make sure it pays off the house for whoever I'm leaving it to. So
Hey, Joe, that was so good. Will you say it one more time? Because I'm trying to type it all out.
yeah, right. So
Appreciate you.
hey, and so in equity payment, right, or payment protection, Graham, right, we're going to show you a couple of policies, one that'll pay off the entire mortgage for you. And if not, no matter what, we'll have anywhere from like 6 months to about 2 years worth of payments for Mary. Right. And that keeps them on the hook to the very end when I'm presenting, right? Because now they know I didn't, even though I took the full mortgage payoff right off the table off of a term, again, they don't know that right yet, right? Like we got to show them our job through the presentation. Really, we're consultants, right? And we're problem solving their situation. So realize we got to get them out of their own way. That's one of my favorite sayings, right? I got to get them out of their own way, because up until this point, realize they've still seen the forms that we've sent out technically still say, right, for you qualify for full mortgage payoff, right, critical illness, right, and some of them have prices on there, right, or vary, right, from return of premium and stuff like that. So we got to get them out of their own way when they're coming into an appointment, because let me tell y'all, one of the clients that are going to come in here wanting the full mortgage payoff is going to be the 78-year-old guy that has cancer or had a heart attack, that knows he's going to pass away very soon. That marketing, right, is very attractive to him. Like, I want to make sure I can pay off the entire house. Well, I bet you do. Right. So we have to keep him interested enough to where we show him that we do have a problem that'll solve the actual need. Right. And so as y'all are running an appointment too, I do want to bring this up. Sometimes at the very beginning, they're like, well, are you going to show me the full mortgage payoff? And very often as an agent, we're just like, well, no, you're not going to qualify for that. Right. And realize our job is to run the appointment. Right. And you are off script if you're not following script. And what I mean by that is, if you stop in your script and you answer a question like that the wrong way, you're off script. Right. Because the script never said answer that particular question. Right. The script says follow the script. And because you got to make sure you get them out of their own way. A lot of clients are going to say, well, I want you to show me the full mortgage payoff, right? And one of the forums said it's like 28 bucks, right? I had one like that the other day, right? I'm like, hey, yep, my job is to go over those options for you. And then that's it. I don't explain anything else. I just go back to script, right? And so right, so your address is this, right? And I acknowledged what they said, but I keep going with the script, because I don't want to answer their question right there, because it's going to give them something to grab onto and be negative about the rest of the appointment. Right? If you've ever been in that situation, you're going to hear stuff. So you're not going to show me the full mortgage payoff. I thought this was the full mortgage payoff with living benefits, Amber. Right? Or I thought this was going to have the return of premium for 28 bucks. right? You'll hear stuff like that. And it's because you try to defend your position of what you're going to show them versus just acknowledging they said something.
And it's funny because your client literally said that yesterday in the
Yeah.
appointment.
Right. And so look, she said that. She goes, I only responded because they said the letter said it'll pay off the full house and it's only like $28 and it's return of premium. Y'all want to know what I showed her? In fact, I have it right here. I showed her CBO for $304. Right. And we have a meeting again to follow up on Friday. Right. The only way I got to that point to show her that options is I acknowledged she said something, but I didn't answer. That is very key when you're going through the options, right? Because they will ask you questions on this part, right? And when I say this part, let me share this, right? So everybody see that?
No. There.
Stretch on. Right? Y'all see this, the script?
Yep, you're good.
Okay. Right, so this is just the real script, right? And we're on page 6. That's where we explain the 3 options, right? And so just understanding, they will pause here and they may try to interrupt you. You can't stop the interruption, but definitely don't answer the particular question that they're having. Acknowledge they've said something. Oh, okay. Right, or that's right. And then I just go back to script, right? I keep running it. Because it doesn't matter what they say, remember their job as the client is to poke holes in your presentation, right? And if they stick in that spear and you grab it, guess what? Now y'all are doing a back and forth, and y'all are going to get stuck with they're going against the options you're showing. So this is very hard because we want to answer questions for them at this point as agents to clear. Right, like to clearly communicate, but there's so much power in acknowledging and not answering a question because again, it stops them from fighting back. So just remember that. I would write that statement down. In fact, right, there's a lot of power in not answering the question for the client. Again, we want to, right, especially if you're right, a very systematic person, guardian voices and stuff like that, we instantly want to say, oh yeah, that's right. We won't be able to show you the full mortgage payoff. Right. And I'll ask the agent, like, well, why did you say that? Well, it's true. I'm like, yeah, you're right. Right. But we're killing the sale there, confirming again, what they're thinking. Remember, what mortgage protection is a concept. Okay, I'm sure y'all have heard this before. I've said it, but I love to repeat this part. Mortgage protection is a concept. It's not an actual policy. It's not Term 100. It's not TLE, and it's not any other policy. Mortgage protection is a concept. We are life insurance agents, and we only sell 2 types of policies. That's the only 2 types of policies that exist in the world, and that's a term and a whole life. Right inside of those, there's final expense, IULs, terms, and universal. There are all kinds of stuff, right? But what we sell is a concept of how we can make sure the client, and listen to this, how we can make sure the client doesn't lose the house, their beneficiary doesn't lose the house through life insurance. That's what we sell, right? What we use is actually not based on your decision as an agent, right? You cannot mess up and be like, oh, I accidentally, no, we don't control what we show them. They actually do. And what do I mean by that is their life choices is what determines what we're going to show them today, because it's going to be based off their age, health, and budget. Right. So that's why when we have to run the appointment to make sure we're helping the client the best way. Right. And so, yes, we can prep for an appointment, but that's why we always teach, right? We'll do another one, but there's training out there where we've done the pivot, right? You got to be ready to pivot, because you may have the full mortgage payoff ready to go because they were 58 years old and they easily qualify to pay off the $100,000 house. But then when you ran the appointment, you discovered that they don't have anyone that they're going to leave it to. Maybe they're going to leave it to a nephew or one of their grandkids or a son or something that doesn't live here, and they don't want anything to do with the house in Arizona, and they live in Wisconsin or whatever. Guess what? You don't need to show them the full mortgage payoff. You need to show them payment protection, just enough time for the kid to have right? 6 months, a year's worth of mortgage payments so that they can make sure, hey, my dad died. I need to sell that house because that's the plan. And right. So what that does, right, is you prep for the full mortgage payoff, and you're in your head, you're pitching $100 policy. But based on the appointment that you ran, the best thing for the client, right, is a $30, right, 6-month payment protection, right? So that's why you got to understand the concepts, right? I think that's the biggest thing, because when you truly understand the concepts, they hear it in your voice, right? A lot of times they're like, man, how do y'all make so many sales? It's not that we can make so many sales, is that the client feels and they hear through our presentation that we are presenting them the best solution for them, right? Or we're solving their problem through the concept of, right, through life insurance that's going to solve their solution, right, their problem, right, that we're presenting that solution. So just I love to bring that up because a lot of it is, it really is mental for us as an agent. I watch agents struggle when they don't like equity protection and payment, right? We have a lot of new agents that are like, well, I'm not showing them the full mortgage. You're not, right? Very few times. 85% of our policies that we write, we are showing critical period, right? Or payment protect 85% of the time. I want y'all to remember that number. Most of the time you're helping a client, you are not showing them the full mortgage payoff. It ain't your fault, right? It's based off their age, health, and budget. Either they're running out of money budget-wise, right? Or they don't qualify for the full mortgage payoff, or they don't qualify because of their age, right? So
And Joe,
again, remember those concepts. Yeah.
I think that's a really good point because, I really struggled with this early on. And a large part of that conviction is understanding what it actually looks like when somebody passes away. Would you talk for 2 seconds about how much work it is to qualify for a loan, sell a house that's across the country, take care of all the stuff that needs to be taken care of if somebody passes away? Because a lot of people don't have to deal with that or never have. So it's hard to have that conviction of how much work that is and how helpful it is to have that short-term runway to be able to get to that end result.
Oh, great point, right? Because it's learning all these little things, right? Of what happens when somebody passes away, right? If you've been blessed enough to where you haven't been really close to that experience, right? It's tough. I've watched my uncles lose a house through a heart attack, right? Like I've watched the battle, right, of who's keeping the house or who's making the payment, right, between siblings because somebody passed away, right? I watched my dad and uncle lose my grandpa's house because they couldn't make a $500 a month payment, right? And my grandparents lived there for must have had to have been like 12, 15 years. And this was when I was in my teens, right? I didn't understand insurance concept back then, right? But so my grandpa left the house in San Antonio where we used to live to my dad and my uncle, which were the two oldest, right? It was a small house back. I mean, I think it was like 60 grand or something, right? But the payment was only $500, but between both of them, they couldn't afford that payment. And so the bank came in at the 3-month mark and just gave them what it was worth. They were just happy they weren't going to owe the house or get it repossessed, right? And so they probably lost a good $20,000 to $50,000 in equity, right? And imagine a $5,000 policy that could have been on my grandpa would have saved my dad and uncle that, and they would have made profit off that home. Right? They may have still owned it right now. I don't know, and been renting it, right? There could have been so much more money there, right? And it's just that struggle. So when you start to understand what that means, and I'm glad you said that, Nate, because Jimmy even asked me this the other day. He was looking at an 81-year-old client, I think, and we were looking at a $10,000 or $15,000 policy, but the mortgage is like, I think the mortgage payments were like, I want to say $3,000 or something like that. So in Jimmy's head, it didn't make sense. That was the point, right? Like he was like, well, but it's $280, right? And I'm like, well, $280 gives you access to the equity in the home, right? And he's like, well, he's gonna have to pay that. And I'm like, you got to understand where families are at and people are at, right? You realize he's 81. Just off of insurance numbers, he's got 2 years to live, right? Like that average male adult in the insurance world is 83. So you're telling me if he pays 2 or 3 or 4 grand, whatever it is in payments, and it pays out $10,000, $15,000 in trade for, right, 3,000, how is that not a win? Right. And then that gives the beneficiary the opportunity to make mortgage payments for 6 months and not lose the house and get $100,000 out of equity. Right. And that's the concepts that y'all have to understand as an agent, so that when you're talking to the client, they hear that in your voice, right? Like, hey, right, what are you going to do when this happens? Right. Like, let's walk through that. And what Nate said, right, is getting them to say these things, right? Like, hey, what does that look like? Right. And we'll dig in a little bit on assuming the sell on that part. But as y'all are explaining these options, right, these are things that you're going to have to overcome or understand. I would say the biggest thing here is you believing in these products that way. Right.
Joe,
Yeah.
where is this script at? Just so I can kind of review it. I hate to say that, but
Oh, no, you're
I
good.
think
You're
that,
good, right? It's the real script, right? Then
yeah,
so we'll post it in here, and it's in all your training when you go into HQ and you go through
I
Basecamp. If you
yeah, I
have
did that.
okay, so if you go back to Basecamp, it's in there, but we'll post it in here.
Okay.
So, right, and this is the script that y'all should be using in every single appointment, right? In case y'all don't know it, let me reshare that. Right. Right. So it's our real script presentation. This is how you run an appointment, right? Make sure everybody knows that. This is how you walk through and you just read this puppy word for word. And then the explaining the options, right, is in page 6. That's what we're talking about today. So
Hey, Joe.
understanding those. Yep.
Hey, Joe. Sorry. Again, I got kids here. So the point about reading the script, guys, and I've said this a couple times, if you haven't heard this and you're new and you're scared about being on a Zoom and reading the script, what I did and when I started, and this is Mark Schenkel here, you know, tell the client, hey, Joe, obviously, there's some compliance issues. You're a truck driver. Monica is a teacher, and you guys know about compliance, right? Yeah, sure. Well, there's a lot of compliance here in insurance as well. And over the weekend, some of the carriers dropped some new compliance regulations. I was with my family and I didn't have time to go over the new compliance regulations. So, would you guys mind if I just read a compliance script so you and I both know that I'm being compliant? Would that be okay if I just read a compliance script? Every single time they're going to say yes. And then you don't feel weird looking down because you're literally reading the script. Literally.
And I love that because that also gives you the power to not let them interrupt y'all. Right. Be like, because that allow, right. And it also makes you feel a little bit better as an agent when you just kind of ignore again, right. Acknowledge what they say and then go back to script. Hey, you told them from the beginning, hey, I'm just reading my script to make sure I go over everything for you. Right. So there is a lot of power in what Mark is saying there, right? Being able to read this script and just go through it. And again, acknowledge what they're going to interrupt you. Okay. They have questions. It's okay. You don't have to answer the question. The script answers almost every single possible question they're going to have if you just read that puppy. It's got years of experience, right? From the best producers, right? And the best insurance agents built into this puppy. It takes care of everything for you if you read it. A little bit more into, right, the 3 options. I also like to plug this in, and I'm going to share my screen just showing you all this again. And I'm going to blow this up a little bit for y'all, is making sure you know what you're showing the client. This is why it's so important to prep for your appointments. Don't go into the appointment if you haven't prepped. You need to know right? You got to have a good idea of what you're going to show a client so that you can maybe delete some of these options from them, right? And what do I mean by that is if they may be 45, they may be 50, so you can show them a full mortgage payoff. But if they had a heart attack 2 years ago, you can't, right? And so when you're booking that appointment, you need to make sure you're asking those health questions so that when you're in the script, you're taking that off the table. It is so important to take some of these options off the table when they don't qualify for it, because on their behalf, you got to understand everything up until this point. They thought you were going to show them the full mortgage payoff, right? Like it said, the paper said, right, you can protect your entire home in case you pass away, right? You've gone through the script. If you go through the script, right, we're telling them, hey, we're going to show you the full mortgage payoff. Some families use it for this, right? And that's up here at the top, and that's important to know, right? We're also talking about the options. Where are we? Right, when we're talking about what mortgage protection is, right, and this is page 1, right, we're telling them, right, families use this. Right now, some families do the full mortgage payoff if that's in the cards, right? A lot of families do a little bit. Realize even at the beginning of the script, we may accidentally be telling them we're going to show them full mortgage payoff. It is very important for y'all to know if you're not going to be able to show that to them, right? So that you can poke that bear, right? So you're able to say, hey, but because of the heart attack, right, this option's off the table, right? Because of the cancer, like, don't be afraid. Remember, we sell life insurance. We have to talk about death and illnesses. That is the pain points that we call in a sales presentation, right? That you have to leverage pain points, right? Hey, because of the heart attack, because of this, right? The great news is, families, right, that have had a heart attack, we get to show you option 2, or we get to show you option 3, right? Again, presented in a positive way. The great news is we have a solution for that.
And you can do a lot of power with your tone, right? Even when you're reading that, make if you know they won't qualify for the full or partial, make that almost sound like meh, right? And then just go, a lot of people do just enough to help the family with the transition, and just make that like the hype.
Yeah, and again, man, read these scripts, right? It helps knock the option off, right? Look, the full mortgage payoff generally is the most expensive and hardest to qualify. If you're reading this, right? So, hey, if your client's 65, 60, right, or 70, right, like, hey, generally, right, this is the most expensive and the hardest to qualify. Because of the heart attack, right, this one's going to be off the table, right? The cool part is, or the great part is, right? And then if it's situations like that, guess what? You can X out option 2, because option 2 is just option 1, but half, right? They don't qualify for that, right? So then I get to say, hey, so the great news is, normally I see clients do in your situation, where we're going to look at option 3. The great news is, right, it's the most, right, it's a little bit cheaper and the easiest to qualify for. So we'll be able to get you approved today, right, for coverage like this, right? Again, we poked the bear, we took the options out, right, that they wouldn't qualify for. We still let them know it was there, but we let them know they don't qualify. I think that's very important, right? In a consultant role, it's important to let them know it's not your fault, right, that we're not showing them this, because, or your idea, should I really say, because they're going to be like, well, why don't you show us the full mortgage? Or I thought this was to pay the full mortgage off. It's because you didn't take it off the table, right? And then also you need to position yourself. This is not your idea. It's because of, again, they decided, right? Their life choices decided, right, what we're showing them. And when they can hear that in your voice, they feel like they can trust you, right? And hey, look, and because of that, the great part is we do have a solution, and we're going to use this option 3. That's going to be the best one for you, right? And look, they hear it in your voice that you know what you're talking about. And even if you're brand new, it ain't that you know what you're talking about. It's that you're just following the script, right? That's where the power is at. So any questions on the 3 options that we talk about? And in fact, let me add, right, this says 65. Normally at 60 start looking at equity or payment protection, just because, again, if they're 62 and you're looking to try to pay off anywhere close to 100, 200,000, it starts getting very pricey, right? And a good rule of thumb is 10% of their mortgage. What do I mean by that? If their mortgage payment is $3,000 a month, 10% of that is 300. They're okay with up to $300 budget, right? It's not that much. And then their age starts to play a factor, right? Our average policy is about $100 a month right now, right? Which is $1,200 APV. So if you know that's the average sale, try to have one of those in, right? You want to have $100 policy somewhere in your options because that's going to be the average sell. It doesn't always work, right? Sometimes you got to go to the 10% because they're way too, right? They're either older or the mortgage is very expensive, right? But just again, some really good rules of thumbs of why you're looking at some of these options as well, right? Because you'll fall into the place where, you know, they're 58, 57, and their mortgage is 450,000, right? And then you only show them even the full mortgage and a partial mortgage, right, is $450 a month and $289, right? Almost a $300 policy, right? If you show them that, you're almost always going to get shot down, right? Because now you're asking them to pay 500 or more a month and realize their mortgage payment is only right 2,900, 3,100. It is way beyond the 10% rule, right? So that's where you have to start making judgments. And again, right, that's why you counsel with your upline, right, or use the workroom. Everyone will give you a ton of great ideas to present it. And that's when you start showing, right, a lot less than partial, or, right, I like to start going already towards payment protection, right? And then we add that accidental to be able to say, hey, I'm going to show you, right, we're going to pay off the full house. If it's an accident, exactly what you wanted, it's paid off. If it's not an accident, right, Mary has 2 years worth of mortgage payment so that she doesn't have to worry about it, right? And if you use these words, man, they're so powerful, right? You're able to say stuff like this, right? Like, hey, if John dies, Mary, right, but I brought you a check for $50,000 and your mortgage is 200, 300, are you really going to be upset with me? Right? What would those $50,000 do for you? Like all this stuff is in the script. It helps you, right? Again, use this script word for word. It gives you objections or how to overcome objections. And the really cool part is it prevents them, right? Like if you say these stuff word for word, you just won't get that many objections. If you ever heard Mark Schinkel run an appointment, he reads this puppy word for word. They just have questions. They're like, hey, Mark, so I understand this correct. It's going to do this, right? Because they don't have objections because he reads the scripts that overcome or that prevent them, should I say, right? Because he talks about like, hey, I'm going to show you some options. Your job is to, right, be honest with me. Don't give me the think about it, right? Don't give me the think about it because I'm going to talk, right? I've been doing this long enough to where I know when people tell me to think about it, it's price or they don't understand. Feel free to tell me if you don't understand or if we need to lower a price, right? Like the script prevents the objections really well. So anyone with questions on full mortgage, partial, critical period, right, or payment protection, let's answer them.
Joe,
Yeah.
the script that I printed out was called the best system, and what you showed was called the real system. Are we
Correct.
supposed to toggle back and forth on those two scripts or what?
So the best system is to book the appointment. That's when you're calling the lead, right? So that's when you have your lead and you're going to set the appointment for tomorrow. That's the best script. So the best script is how you book the appointment. And then the real script is how you run the appointment. So there are two different scripts for two different things.
Okay, and another question. When you're asking people these health questions, is there a form which we can mark these answers on? Because I can't hold that stuff in my head. Where do we?
So there's a client qualification form. I just write everything down, right? Like I have that way I have everything on one sheet. I don't, right? So there's a client qualification form. You can put everything on there. Or if you're using the funnel, the dialer, right? You put everything in your notes. That way, everything's whatever you use, it works, right? Just try to keep everything in one place.
Okay, I haven't seen the funnel yet, and I like to be organized, so I want to know. I don't want to lose this information. I want to have a way.
Then I would highly suggest the funnel, right? The funnel it keeps the notes with your clients, and it's really cool for that. Again, if you're not on funnel for now, right? Notepad or one sheeter, right? That way, because I write down again, get comfortable to where you have all their information that you need for your appointment, right?
Okay.
Client qualification just literally says health questions, name, right? Like so.
Right.
Then you got to go print, right? Then you got to go print those, right? So I
right
keep a notepad.
and Medicare, I had to do that.
Yeah.
If they get a policy, say for 6 months coverage or a year coverage, when that time frame comes to an end, can they renew that policy, rewrite that policy, or what happens?
So that's a great question because clients ask that all the time, right? So that just means a little confusion, right? So remember, this is a life insurance policy. So when we're looking at 6 months worth of payments, for ease of numbers, let's say their monthly payment is $2,000, right? So if y'all want to run through this, write that down, right? Their mortgage payment is $2,000, right? And we're going to show them a policy that pays them 6 months worth of mortgage payments. We're showing them a policy for $12,000. So the day somebody passes away, Laura, they get a check in the mail, right, for $12,000. Right? With those $12,000, we know their mortgage is $2,000 a month. They now have 6 months worth of mortgage payments for them, right?
Okay.
That's a great question. Literally, they asked me that yesterday too in one of my appointments. They're like, so what happens after the 6 months, right? Because they think they're just paying it for 6 months or whatever it may be, right? So make sure when you do get that question, right, like, hey, remember, this is a whole life policy. It's going to run forever. The payment always stays the same. You never have to worry about anything adjusting or changing on you. And it doesn't matter when, Laura, the day, right, you pass away, blank has 6 months worth of mortgage payments in the form of a $12,000 check.
So basically, we're buying them time to make a decision whether, they're selling the house, whether, mom's going to have to refinance, whether whatever.
Yep. Right. So remember, through insurance, we're showing, remember, our real goal is not to pay off the house. I think that's a very big misconception for a lot of new agents. Our job is not to pay off the house. You almost always never will. It is so rare. Again, in my numbers, I don't know if it's the states that I work, it's probably like 5% to 10% of my clients ever get a full mortgage payoff. Everyone else it's half, or 85% of them is the payment protection. Most of my clients have that option, right? Again, it could be the cities and states that I work, but in my book of business, it's 85%. It is very rare that I pay off a full house, right? So
Thank you. I thought I was crazy.
Yeah, no. That's most of the time, right? Again, you're running out of budget before you can even get close to a full mortgage payoff. What I mean by running out of budget, they can't afford it, right? They can't
Right.
afford $500 a month, or you can't get them that much coverage based on their age, health, or budget, right? Because if they're 55 plus, right, you're going to struggle with a term, right, that's going to get them more than 500,000 or 200, even 200,000, right? Only America really starts going up to 450 and some of our newer products, right? Because like Term Life Express only goes to like 150 at that point, right? So we start getting capped with certain ages and stuff like that. So again, the best thing, I love what you said, Roy, right? Our job is not to pay off the full house. Our job is to make sure the house doesn't get taken by the bank from the beneficiary. Knowing that, it doesn't matter how you solve that problem, right? Through equity protect, through a $5,000 policy with Eagle Select, right? Through a $100,000 policy on the term, through an accidental, because that's all they could afford for $50 a month, right? Your job is just to provide a solution based on the appointment that you ran through the three options that we provide. You're going to provide a solution that, hey, when John's gone, we make sure you don't lose the house immediately, right? We're going to put something in place that gives you time, options, right? Or pays off the house, right? That is what we truly do. And man, when we really capture that as an agent, that's when you're so good in an appointment, because it doesn't matter if you fell off script and you mess up, they hear it in your voice that you are solving their problem. And that's the real thing that I love to talk about, the three options, right? Is when you truly understand full, partial, and critical period, it's not that you're picking an option for them. It's the fact that you're solving their problem, right? Through one of these solutions, and they hear it in your voice. They're like, man, and your daughter, Natalie, right? She's going to have 8 months. Right. And if it's still in the budget, because based off what we looked at, John, right, you got $1,000 left over. What if we did that $200 policy that gives her a full year, right? Because she's in college, right? She's in a different state, and it's not like she can just leave school and come figure out the house problem. But this will give her, right, if she's in the middle of a semester, she'll have 3 months to not have to worry about it, get to come over here during the summer, right? Figure out if she's going to sell the house, put it for right, whatever she's going to do. But they hear that in our voices, right? That we're convicted of the solution we're solving or the problem we're solving, right? Through these three options. That's what I really want y'all to understand today, right? Is these three options are powerful. And it doesn't matter what you use, right? It doesn't matter it's Eagle Select or American Amicable or a term that doesn't matter. What matters is the concept that you sold to them, right? Of how to make sure that that beneficiary doesn't lose the house and they get the equity out of the home. Man, when they hear that in your voice, right, that actually leads into the next part, right, which is assuming there's the sale.
Hey, Joe,
Yeah.
real quick before you go into that, I think you could get in trouble setting the appointment if all you're saying is, it's the coverage that will pay off your mortgage, right?
So,
And not saying it's
yeah.
coverage that could pay off your mortgage or make
That
payment.
killed a
if
lot of
some-
my appointments, dude.
Yeah. So if you're saying that, then you got to backtrack and kind of explain it to them. So just, being careful setting the appointment that you're saying, hey, it's the coverage that would pay off the mortgage or make mortgage payments if something were to happen.
Yeah, and if you're right, a lot of times when we're saying that is because we're scared to tell them we're that they're 67 and we're going to look at critical period, right, or payment protection. Again, that's a you thing. You need to overcome. You truly got to understand that these three options are the best solutions for them possible, right? So that you're not saying, right, because then we get nervous, right, of hey, so right tomorrow at 5 o'clock we'll be able to show you that full mortgage payoff. Right, you're trying to hook it, right? You're trying to be a salesperson at that point, even though we're more consultant role on this, right? We just got to use a lot of sales techniques, right? The technique you don't got to do is the shove it down their throat technique, right? That'll cause somebody saying, hey, you're not showing me the full mortgage payoff, I don't want this, right? Or that'll cause a chargeback, right? Where you're shoving stuff like that down their throat. That's being a salesperson, right? We're solving an actual problem in their home based on their finances, right? That's truly what we do. So I love that, right? Make sure in the beginning of the appointment, again, you're starting to cater to the option you're going to show, right? And so you're able to say, in fact, that they're right. They were 79 and I'm booking that appointment, right, Rodney? I'm not going to say, hey, yeah, so tomorrow we're going to show you that full mortgage payoff, right? We're saying stuff like, yeah, so tomorrow we'll be able to make sure, right, Mary has something in place that she doesn't lose the house. And they're like, sweet, that's exactly what I want,
So
right?
Joe,
But I didn't promise the full mortgage payoff.
the length of the term appears to me like it has nothing to do with the price after what you said about the payment and the time frame. So is that true?
Length of the term of the house or the policy that we're
The
showing?
policy.
So again, that doesn't even matter either. I do all the terms I do. We don't talk about the term until I tell them what we're actually showing them, right? Because again, remember that we're solving a financial solution. And so based on their age is really what you're going to base the term on, not the house, right? If they're pushing 50 and above or 55 and above, I'm showing a 15-year term, right, through term 100. Right. It's because I gotta try to stay inside of a budget because it's gonna get expensive. When they're 56 and they're trying to look for 300,000, that puppy's expensive, right? I need to stay within a decent budget that makes sense for them.
Okay.
Right. So it'll just determine, right, if they're really adamant about a partial payoff and they are healthy and they're pushing 59, you may have to pivot to stuff like the 10-year term, right? I try to stay away from 10-year terms. But sometimes those are the only solutions, right? Again, we don't really determine that. It's the client, right? Their age, health, budget, and then the amount of mortgage that they're doing. Again, ideally, you want to get them as many years as possible, right? That's financially in their budget. That's your goal, right? But again, it ain't really that we determine it, right? If they're pushing 58, you're probably almost always going to look at a 15-year term because a 20 is almost $100 more, right? So it'll be, and then remember again, the concept is we want to put coverage in place right now when they have the most amount of debt. So the really cool part about a 15-year term, right, is for the next 15 years, they have the most amount of coverage when they need it the most. And in 15 years, right, they owe half the mortgage almost, right? So we can adjust it, right? It ain't like our policies with term don't just end. That's the cool part. If you're using our core carriers, they convert or they renew, right? So we're able to make a decision at the 15-year mark, right? Most of our terms run to 95.
That's what I was wondering.
Yeah, most of our terms run to 95, right? We're just locking in the price for 15 years. And at that 15-year mark, when you owe half the mortgage, guess what? We get to make a new decision. Instead of the $300,000 policy, we just need 100,000 now, right? And you'll probably stay around the same price. Or if you want to stay around 200, right, it's going to go up a little bit in premium. But we'll make that decision, Laura, at that 15-year mark. And that way there's always coverage in place for the rest of your life. So that's the really cool part about a lot of our products, right? They keep going and they'll convert, right? Because most of our terms too with our carriers will convert to a whole life at that point, right? So when you're dealing with 60 or that 55 mark, right? And you're running a 15-year term, they're going to be, right? They're going to be 70 by that point, right? Be like, hey, the great part is at 70, we get to convert that puppy into a whole life. So you'll always have coverage. You'll be guaranteed, no matter if you have any health conditions, right? It's guaranteed insurability. We'll just convert it to a whole life. We'll get a lot less coverage because you're going to need a lot less coverage, right? Because the mortgage is a lot less right now. And listen to how I said that, right? Because I'm convicted with our products, right? And again, I shouldn't say products, with our solutions, right? With our concept of mortgage protection, because that's a great one, Laura, right? I'm going to show you a 15-year term because they always ask, well, what happens then? I'm like, look, it runs to 95. We're just gonna have a decision to make, but listen to how I say it. I don't say it's scared. Do not get scared that you're showing a 15-year term to a family. It is the best solution for them. Our job is to get them the most amount of coverage for the least amount of premium, right? Through doing that process is how we get to solve that for them. So I love that. Any other questions before we get into assuming the sale?
No, but you just clicked a light bulb on for me. Thank you.
Yeah.
I guess I don't know. As I said, I had a 68-year-old man and he had like 400,000 and I'm like, I'm sorry, but you can't afford this. You're only making like 42. I mean,
Yep.
and his wife, I'm like,
Yep. You got to go critical period, right? You're showing, again, your job is not to pay off that $400,000 house. Your job is to make sure when somebody passes away, the other person doesn't lose the house. That's the solution we're doing. So let's go into assume the sale. We got about 10 minutes on this. Again, if you're pitching it properly, you got one. I love to talk about when I say assume the sale. Look, if they showed up for the appointment, I can't say this enough. You should be writing an app. You should be at the 60 to 80% close rate, right? Zoom is the highest close rate. Phone works too, right? But Zoom is the highest close rate. But you should be assuming a 70 to 80% close rate if they show up to the appointment. Okay. Why do I say that? There's too many yeses in between them showing up to your appointment for you to buy their, remember, they're buyers are liars, right? Yeah, if I've ever heard that term, buyers are liars, right? And so they're protecting themselves. They believe in insurance. That's why they showed up for your appointment. They believe in insurance. That's why in the appointment you uncovered they have a life insurance policy. They believe in insurance. That's why when they filled out the form or called it in and heard it was life insurance, they still booked an appointment with you, right? Like there's too many yeses in between them showing up the appointment. I think there's 5 or 6, right? We've gone through that training, right? There's like 5 or 6 yeses. I think by the time you get to the role and purpose and they say, yes, that sounds good, that's their 7th yes. Okay, so once you get to the role and purpose and you've explained what you're about to do and they say, yeah, that sounds good, 7 yeses have happened, right? From the form, from them buying the house, getting the form in the mail, mailing it or calling it in, getting called, booking the appointment, right? Most sales happen after the 2nd book. So that means they've told you twice, yes, I'm going to show up for the appointment. Then they finally show up, right? Then they hop on Zoom, they accept, they send you a yes through a text confirmation and an email. There are way too many yeses for you to buy this lie. And I love to sell this because it's a car lot lie, right? If y'all have heard this before, hey, I'm just looking around, right? When somebody walks into a Jeep dealership and they say, hey, I'm just looking around. No, they ain't. Okay. That I promise you they ain't. I've been in car sales. I owned a car lot for years. Okay. There is a car on that lot that they specifically came for. It is the only reason they showed up to your lot. Hands down. So if they showed up to your appointment, I don't care what they're telling you. It's just the sales push off, right? They're just making, right? They're just trying not to get sold, right? But they want life insurance. They want mortgage protection. It is the only reason they showed up. Now, what are things that they're going to say that are going to make you assume that you're not getting a sell? And this is all in your head, right? Is, hey, I just need to know quotes. Hey, I just need to know prices. Hey, I just wanted to know what this is. You knew what this is. There's too many S's in between here. Okay. That you're going to hear all these things. I don't make decisions. I just need to know a little bit more information. Right. Hey, I just saw yesterday mine, right? Well, I just called because it said you had a $28 policy. Right. You don't let that into your head. It is all lies. That's like their car salesman pitch that, hey, I'm just shopping around. No, they ain't. Okay. They came for a specific car on your lot. They came for a specific product in your tool belt, which is mortgage protection, right? How you solve that for them doesn't matter, whether it's a critical period, whether it's a term, they came for that. I promise you, they came for that product. There are 7 yeses in between that. So you got to assume the sale. A lot of times we will ruin ourselves. You've done a great job following the script and you've pitched it really well, but then our posture gets a little scary, right? Because now we need them to make a decision and point the finger, or that's the one I want, or say yes. So you've got to assume the sell. Posture, okay? Once you've gone over options and you said, hey, and if you follow the script, you shouldn't get to think about it, right? Up to this point, you should have said, right? Your job, Ellen, is to right, be honest with me, right? I've been doing this long enough that, hey, when somebody tells me they need to think about it, or right, they need to pray about it, right? Whatever's in the script, that usually means either it's outside of your price range or you don't understand something. Your job at this point, Ellen, is to make sure you tell me, right, and be honest enough with me and trust me enough that you'll do that for me, okay? My job is to simply just explain what I normally see families do. So let's go through this. I go through the options. I'm done with the options and be like, hey, Ellen, so that's what you qualify for. Remember, you can mix and match. You can find, our goal today is to simply fit your budget so you have protection in place today. Okay. I've been talking all day, Ellen. I'm going to give you a minute to think about it. I'm going to go grab some water. I'll be right back. Make sure y'all are pulling the water trick. If not, you're going to get to think about it. Right. Once that happens and you come back, you assume you expect, I want that one, that one, that one, and that one, Joe. Right? You come back and your simple thing is, so which one did y'all want to apply for today? Listen to the posture. So which one did you want to apply today? You should get instantly approved. That's it. And quiet. This is the hard part. When you say, hey, which ones do you want to apply for? I struggle with this daily. It is so hard not to talk. Right? Then you start sweating because it's been 15 minutes or 15 seconds. Then it's at 20 seconds and you're like, oh, shit. Hey, so if you want to think about it, Thursday, why are you rescheduling that thing? Right? We do that. I promise you, I do that. You got to be careful. You got to protect yourself. Assume the sale. It needs to be, hey, which one did you want to apply for today? And then just get quiet. If it's gone more than 30 seconds and you feel like you have to say something, don't. Okay, you got to let them, they're still thinking, right? It is so hard. You got to let them pick, right? Now here, if your posture's great, I wrote down, and so I would make sure, write these 2 things down: posture and a good statement, right? This is not a question time. Okay, do not say, did you want to apply today? Right? Do not say, which one of those did you want to try? That's a question. Okay, same words, but I want you to hear that's a question. You got to make a good statement. Which one did you want to see if we could get you approved today? Which one of those best fit your needs? Which one of those best fit your budgets? a statement assuming I'm filling out the option, right? You can add stuff. You can be very assumption. Hey, well, let me pull up those. Which one did you want to apply for today? So I put that right amount in. We ain't playing around. It's app taking time.
Joe,
Right?
could you repeat those three?
Yeah, right. It's hey, which one did you want to apply for today? Which one of those fit your budget? Right? Which one of those fit your need? Right? Like, and then again, a really assumptive one is, hey, I'm pulling up the programs. What amount did you want to try to apply? Which one? What amount did you want to apply for? Right? Not try. Right? What amount did you want to apply for? You got to be very assumptive.
Yeah, which one you want to go with?
Yeah, which one you want to go with? It is not a question, right? Even though you can make it sound like a question, that's the problem, right? Which one did you want to apply for? Well, none today, Joe. No. I'm filling out an application right now, right? You got to be very, very assumptive. And then the biggest thing here is if you have that assumption, you got to be very careful. You will kill your sale here. A yes, 90% of the time does not sound like a yes. What do I mean by that? They're literally not going to say, Haddon, we want to apply for the 15-year, or we want to apply for the 200,000. I wish they said that. I promise you, they don't. They say stuff like, well, I mean, I think we could probably do that, the 200,000, that 158, probably, right? And listen, they sound so doubtful, right? Well, we can probably, right? Do not do this. What, did you need me to lower that for you? No, they just said yes to the 169, 200,000. A yes does not sound like a yes, right? I think that one would probably work. The 10-year, honey, that one, yeah, right? Or I think we'll probably just do, right, the lower options. But listen to that. I think we'll probably just do the lower option. That is a yes. Great. I'm starting to fill that out. You can reconfirm the amount in a little bit. Hey, great. I'm going to start filling it out. Make sure I have that right for you. Amber, I got AMBER. Is that right? Yes. Fill that puppy out. You got to assume the sell. The yes will not sound like a yes. They're not going to say, sweet, Joe, let's go ahead and do right, this one, right? That is very, very rare. It always sounds like, well, I think, right, we probably need to do, right? And then sometimes they don't even talk to you. They talk to each other. They're like, well, babe, we probably should do the full one for you. And they're not even asking you, right? They're still having a conversation with themselves, right? But it doesn't sound like a yes. I promise you it's a yes. We need to, right? If you're gone, John, like the house needs to get paid off. Sweet. So John, I'm going to start with yours, right? What's your middle initial? What's the, right? Like you start filling that puppy out. Things we do is we start rescheduling it. We start to lower amounts. The only thing you do by starting to lower amounts is you give them more options to have to think about it. So you don't want to do that. And then I want to make sure I add, what was it, James? You said something.
I would say go for no too. So if you're showing accidentals, a lot of times they just pick the mortgage protection. So make sure you go for that second no too. Be like, hey, which accidental did you want to go with? The 200 or the 300,000?
Assume all 4 apps. So good, dude. Assume all 4 apps.
And then you say, so did you want to do the 200 or 300,000 to cover the full mortgage?
And you'll be surprised. Yeah, let's just do the 300, right? Because it's $9 difference. That's good. That's good. Oh, what was something else? Doesn't
Joe,
sound like yes, good posture. Yeah.
if you're talking to a couple, you need 2 policies, one for him and one for her.
You need 4 policies, right? One for him, one for her, and one accidental for him and her. So you're writing 2 policies per person. Their mortgage protection or equity protection, right? Based on the whole life or the term, plus the accidental.
You're not writing anything on the house, just the persons who own the house.
Correct. This is life insurance on a person, nothing to do with the house, right? Homeowners is on the house, like car insurance, right? We sell life insurance, so you're going to write multiple apps in a home on people. Man, I think that's it. Any questions on assuming that sell, pulling the trigger? Again, it never sounds like a yes, but I promise you they're telling you yes. Don't say stuff and push it off and change prices, right? Because you feel a little scary. Just pull the trigger. Assume you're writing the application. Go for no. Let them say no, 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 we're not doing that.
And be prepared, have the
Oh,
application
that's what
ready
it
to
was.
go.
Yes. Yes. A lot of times we will stop ourselves from writing an application because you've never written that application because you're scared. You there, holy crap, I showed Term Life Express and I've never logged into Mutual of Omaha and don't do that. I promise you're gonna be like, well, let's reschedule for tomorrow. And then they're not gonna show up tomorrow. Be ready to write the app. So make sure when you prep, you know how to log into the carrier, you know how to write the application. You can go practice on any application today and go through the entire process. Just don't submit it at the end, right? You can enter fake information. You can go through that whole puppy.
America has a
America
full
has a
demo. You can
practice
do the
one.
whole
Yeah,
process.
America has a full one. So that's all we got for y'all. Thanks for hopping on and see you on the next one.